Welcome back to Homebuyer University. Today's episode is all about supplemental tax bills. What are they and why do we get them?
Now, in the world of bills, supplemental tax bills oftentimes are the most exciting because we don't know when they're coming and how much they're going to be for. So exciting might be the wrong word, but I'm going to stick with exciting just because it keeps you on your toes. So let's dive into what supplemental tax bills are. So a supplemental tax bill is essentially a catch-up bill. What does that mean? Every single property has a property tax bill, and that property tax bill is based on the purchase price of the home. So the home that you're buying, say the sellers bought their home years ago, their property taxes are based on the purchase price they spent for the home, which is most likely less than the price that you're paying for that home now. When you buy a home, that transaction gets sent and recorded with the county. And so that new price is in there, and it's a trigger for them to go out and say, hey, I need to change that property tax bill to reflect your new purchase price. However, it's the county, which is a government organization, which means they aren't exactly lightning fast at the things that they do. So oftentimes it can take them 4, 6, or even 12 months to get out there and update the property tax bill to reflect your purchase price and not the old owner's price and tax rate. Once they do make that update, what they'll send out is called a supplemental tax bill. And essentially, it is a catch-up bill. So if it took them 6 months to update that property tax bill, it means any property taxes you've paid have been at that old owner's rate, which hypothetically is probably less than your rate and less than what you should be paying. So that supplemental tax bill is going to be for those 6 months that you've paid, the difference between the old owner's rate and your rate. And so they'll send it in the mail at a random time once they've updated that assessment, and it will be the difference between that old owner's rate and your rate. So that is what a supplemental tax bill is. And I would say on average in California, most counties, you're getting this about 4 to 6 months after you close. So it's always good to prepare and plan ahead for that surprise bill. So that supplemental bill has just landed in your mailbox. Andrew, what do you do with it when it gets there?
So there are two ways you can go about paying this supplemental tax bill. And it all depends on if you do have an escrow or impound account, or if you don't have an escrow or an impound account. Now, if you don't have an escrow or an impound account, you're just gonna have to pay the bill. Just make sure that you're budgeting for that bill right when you move into the home. Now, if you do have an escrow or an impound account, you've got a little bit more flexibility. You can elect to just pay for the bill directly, or you can give your mortgage servicer a call and see if there's any overage or additional funds in your escrow or impound account for them to be able to take care of it for you.
Now, your mortgage impound account should be set up with enough to cover that supplemental tax bill. But there's kind of these legal restrictions on how long they can keep an overage in your account for. So it's possible if you get any sort of rebate checks from your mortgage servicer, from your impound account, you should hold on to those yourself because that's what you're going to be paying your supplemental taxes with. Also, if you don't have an impound or escrow account and you receive your first property tax bill and it's at that old owner's rate, don't celebrate like you got a deal. That supplemental bill is coming at some point in time, so don't go spending all that extra money you thought you had on shoes and fun stuff. Keep it for your taxes.
To bring it all together, a supplemental tax bill is a sort of a catch-up bill that you'll receive sometime after you close on your home at a surprise time. Depending whether or not you've got an impound or an escrow account are going to determine your options for paying off that bill or having your servicer take care of it for you.